Alrighty, boys. Before we get into it, I'm gonna give you a quick demonstration of how I managed PMI last night. This is PMI. Look at the trade, man. Check it. Actually, I can't lie. This isn't even the trade I took. This is the trade that, looking back, I should have taken. This is the trade I took. Still a banger. But, oh my goodness. Also, shout out the new microphone. How good does this thing look? I picked it up for $150 on Marketplace today. Absolute steal, boys. But yeah, man, we caught a winning trade last night. How freaking good. I'll run through how I found bias, the trade I took. And then there was a second trade that I was looking to trade, but I didn't trade it because of being disciplined and not wanting to risk the money that I made from my winning trade, man. I just wanted to call it a day. I took one winning trade. I saw a second setup present itself, and I didn't want to risk. And it ended up working out in my favor. It paid to be disciplined last night is what I could say in better terms. But getting into it, the best place that I could show you this is over here on ES, because coming into the day, man, so freaking clear that my bias was going to be bullish. We have equal highs to the point. This one sitting at 5996.75, and so was this one, exact same. So from here, I really wanted to see us come down and sort of take out some of this low resistance draw on liquidity, do a little something like this, and then come up. However, as seen, we just ripsticked, and this is so freaking typical at the moment, bro. We just keep taking out the draws on liquidity prior to the macro opening, and that's fine, man. It's just something that we need to be aware of. But from here, the other issue that I faced was that I knew we had these daily highs sitting right above us, and on the higher time frame, like if we scale it onto the 4-hour time frame, that is realistically my draw on liquidity. So deep down, I know that I'm not really looking for us to react fully off of this high. However, in the moment, like when we're trying to predict that next sort of 15-minute to the hourly candlestick or the hourly movement, we need to be able to adapt to that. So because of this, I wanted to catch a short, but I wanted to be able to cover myself in case this ended up being some sort of retracement to then come up and take my overall continuation play. Yeah, that was realistically where my head was at coming into the day. I'm really happy with how I analyzed the markets this morning. And yeah, I genuinely fuck with that. So anyways, we take out those equal highs. We also came over here. We took the draw on liquidity on NQ as well. From here, I'm open to taking a short, and I just wanted to see some sort of confirmation on either the 5-minute time frame or the 3-minute time frame. And usually what I do is I just look to see whichever one is providing the clearest sort of data. And today the 3-minute was providing much clearer data. We had this unmitigated fair value gap here, and the 3-minute, we just got this big leg down. We didn't quite inverse this fair value gap. However, we got a retracement into equilibrium. If I can see a retracement, and then if I can see a rejection with some sort of confirmation, that is my trade. And that was what I took the trade off of, was just this next candlestick closure off of the change in the state on the 3-minute time frame, or the break of structure on the 3-minute time frame. Now, where was my mistake? And it was that I should have been looking for an indication that the break of structure was going to happen, because this is going to allow me to take better risk to reward trades for one. This is something that I see a lot when I'm backtesting, And I so often miss it in the charts because I keep my thing so simple. And whether that's just an experience thing, with trading more in the futures market and just focusing on the futures market, I'll be like almost quicker to react to it. But I should have just taken it off of this 1 minute breaker structure, because this 1 minute breaker structure to me is an indication that we're going to fill both of my entry models, because the first entry model that I was looking to take was off of this 3 minute retracement, and then I wanted to see us inverse the highest time frame fair value gap from that retracement, which was this 1 minute. Obviously I didn't take the trade here, and that was the reason that I didn't enter off the breaker structures, because I was too focused on this fair value gap being inversed, because that is my model A. So after we didn't close below that low, I didn't enter, even though realistically I could have entered off of the confirmation that that move is going to happen. So that's something that I took away from today. That's probably the main thing that I was sort of writing about in my journaling, is just the fact that indications of the overall, or looking for indications of my setup presenting itself, is something that's going to really help me to dial in higher risk to reward trades, for one, because the difference between something like this today would have been ridiculous, a 1 to 4, compared to the sort of 1 to 2, 1 to 2.5 that I caught. So yeah, something to think about there, but my entry was just based off of this change of the state of delivery on the 3 minute time frame, and that also happened to be the model A with the inversion of that retracement. This was prior to PMI news, and I knew this in the back of my mind. I knew that we had PMI news releasing. However, I was open to taking the trade. I de-risked slightly, because the past 3 months when PMI is released, it hasn't affected the market that much. And so today, coming into the market, I wasn't expecting it to react anywhere near as much as it did. But when I look at the numbers, and all of a sudden on the screen there's freaking plus 250 on the dash, hell yes, man. Like, I'm not going to complain about a winning trade. It was a good setup. It was a winning trade, sure. It was prior to PMI. Usually that isn't how I'd want to trade. Like, I don't want to be trading prior to these news events. However, yesterday I just wasn't expecting it to be such a major news release or news like candle, because the past 3 months just plainly hasn't been that much of an impact on the market. So after I saw this candlestick close, I moved stops to break even, because in my eyes, we'd come down, we'd taken out a lot of low resistance liquidity here, and we'd also bottom wicked. So I knew that there was potential. We flip up and come and make that extension that I was talking about earlier. Move stops to break even. Barely missed me here. I stayed in the position. Shout out Top Step X on the spread. And then I took a TP1 at these data lows. And realistically, after seeing us close that strongly bearish, I could have realistically just held to London lows. But I had London lows as my TP2, and then I was holding a TP3 down here to these lows here. But after seeing us create a higher time frame bullish SMT with ES, I just looked for a confirmation that this was going to react bullish, which to me was the inverse fair value gap here. And then I closed the rest of my position up here. So save myself another sort of $60, $70 on that position. I'll pull up Top Step X for you guys. But yeah, all in all, man, really happy with the trade. Like, that is both of my models presenting themselves on the exact same candlestick, and yeah, nothing to complain about there from me. I finished the day up $360. It says 4 trades, but I only took that one. It's just the partials. But But yeah, got the account back in profit, so I'm actually really happy with that. Happy to see some clearer price action, even though we sort of failed to deliver off of those draws on liquidity. It's just nice to see us react properly and sort of see both ES and NQ respect it, whereas a lot of the time at the moment it's sort of just SMT after SMT after SMT. There was actually some really good correlation in the markets last night and makes trading a lot easier, man. So that is how I full ported PMI. Full ported, that's probably what I'll call the video, get some clickbait going. But yeah, that's how I traded last night. Really happy with it. And coming into tonight, I'm honestly just looking to keep the same sort of momentum going. We have been trading well. We've been analyzing the markets well. And yeah, man, when we've got strong draws on liquidity like this, it did suck that we came and took those equal highs straight away without giving us an entry. But I mean, when you see that 3-minute confirmation, it's just super clear. We did end up creating this SMT here, but I'll see what's going on now. Because I'm going to be bearish today. Look at this. We have equal lows there. We have this draw on liquidity, and we also still have this draw on liquidity over here. To the upside. Oh, also have equal highs here again. Oh, that's got to be close to equal highs now. 990 and get it. It is equal highs again. It's going to be an interesting one tonight. We're currently just sitting in this range. Draws on liquidity to both sides, so this is going to be an interesting one, man, but hopefully we can bank something again tonight. I'd love to finish the week in a good 1k profit or just any sort of bigger profit. But yeah, can't complain about last night, man. Super happy to be leaving the charts with a win. Super gassed to have a better setup going on now. Like, the mic is freaking sick. The audio on this video is going to be wicked. And yeah, I need to hang up this little chat because I'm hitting the gym now before market open. But I'll love and leave you guys. Good luck in the charts tonight. And hopefully you'll see a trade recap from me tomorrow. If not, I'm going to do a little market analysis video instead on why I didn't trade, if that is the case. But peace, love. Thank you boys for watching. Subscribe, please.